Okay, so you are a real estate investor and you are looking at buying a condo townhouse. Before you do that, it is so incredibly important that you do your proper due diligence on the complex, on the condo corporation first. This is, I would say, more important. The diligence on a condo corporation is way more important than the diligence on any other property because there is so much, it's buying the wrong condo in the wrong complex can cost you tens of thousands of dollars. I'm not exaggerating. It can cost you tens of thousands of dollars if you do not properly investigate to make sure that you're buying the right one. So we have a investor listener that sent us in an email for a question. They are buying their very first investment property. They took our advice and they decided to buy a condo townhouse in Edmonton, Alberta. But they just got the condo documents and now they're starting to ask questions about, hey, how does this work? How does that work? So, Gabby, why don't you dive into the email and go through these questions and we can kind of try and dissect how to go about answering them for him.
Absolutely. So the first question that the listener wants to know is, how much value do you put on the strength of the reserve fund and condo corporation when investing in a townhouse? Wayne, do you want to go just question by question?
Let's go question by question. Okay. I think it would be better.
Okay, so how much strength do you put into the reserve fund?
How much value?
Fund? Yeah.
How much value? Okay, let's do it. Let's break it down by like a percentage.
Okay.
Because let's break down because I measure everything by value. Everything in business and in life. Whether I decided to wake up this morning and do this show, I measured it by the value that I get from this. So let's look at the value of a condo townhouse in Edmonton. Arguably in the top 2 best real estate investing opportunities in Canada. So obviously it's very valuable because you're going to get great returns. Okay. Now, from a due diligence perspective, well, how do I break this down? I'd say when you're analyzing the property, when you're assessing it from a due diligence perspective, I would say there's a lot of value in the numbers. There's a lot of value in how well this performs as a rental property. All right. So we'll start off with that. There's a lot of value in how much money it's going to make. So when you're assessing this deal, and you're underwriting it, you want to make sure that it's a property that's going to make lots of money. Right. And so that makes up a lot of value of it because you're going to be investing into this. You want to make sure that you're getting a good return on your investment. You also want to know that there's some value in the appreciation potential for this property. So not only is it a property that's in a good area that has strong potential for rents, that's going to be profitable, you also want to make sure that the value of the actual asset will go up over time as well. So there's value in that as well.
Right.
And then let's just start with those two. Like if you had those two and there's it's an amazing rental property, it's an amazing area, and there's strong potential for appreciation because it's highly sought after. It's in demand. Investors want to buy it. Home buyers want to buy it. It's perfect for everybody. This is the property I want to buy. All of that can go to shit if the condo corporation isn't managing it properly.
Right.
You can have a property that is extremely profitable on the rental business side and has strong potential for appreciation. However, it's got terrible condo fees. It's got terrible condo rules in the bylaws. And also the reserve fund is not sufficient. And there's going to be a need for some top-ups here in the near future. So let's just keep it to the 3 then. Appreciation, rental property, business potential, profits, and the condo corporation and the reserve fund. What's the value of the reserve fund and the condo corp? I'd have to put it at more than 50%. Think about it like a shareholder. You know what I mean? If you own shares in a business, 51% gets you voting rights, right? If you got 51% of the shares, you vote whether it's going to actually pass or not. If it's 50-50, it has to be unanimous, right? or less than 50%, the other side of it. But I'm telling you right now, if you got a great rent, like it's great for a rental and it's got great appreciation, and the fact that a condo corporation being shitty or the reserve fund being shitty can completely sideswipe, T-bone, and ruin that deal, then I would say that it's worth more than 50% of the value. Does that make sense? Did I explain that thoroughly enough?
So I think what you're saying is that you could have a home run investment property, super desirable, exactly what your tenant profile is looking for. The numbers work, the math works, it has so much potential, but you would easily walk away from it if it had a poor reserve fund or was poorly managed.
Absolutely. Absolutely.
Managed. Okay.
Yes. So I put a lot of value in it.
Yeah.
And like I said, there are more condos, townhouses that are bad. There are more condo corporations that are bad than there are that are good.
Yeah.
I don't have a percentage, and I can't say for every city, but at least for Edmonton, I'd say only 25% of them, max 25% of them are actually good. The other 75% are all shit. It doesn't necessarily mean that, you know, they're terrible and you shouldn't buy them, but I wouldn't buy them as an investment property.
Yeah.
I'd be okay to, like, if it were like, oh, you got to pay $5,000 in a few years for, you know, to contribute to the roof. And it's my home, yeah, like, whatever. It's not that big of a deal. If I'm planning on staying there a long time. But if this is an investment, I got to make sure that my profits are protected and the value is protected.
Right. And really, I think that what people need to know is that, like, you know, even if, so the math really works, this is a great property, on paper it looks really good, but then you have a poorly run, you know, complex where the reserve fund isn't where it needs to be and is not being managed well. What that means is that probably in the near future, when there may be an assessment or a cash call or like whatever it may be, or just like the condo fees are going to increase dramatically, all of a sudden your math isn't going to work anymore, right? So you need to be looking not just at the numbers right now, but the numbers in the future, and the reserve fund study, and, you know, and dissecting your condo documents is what's going to tell you what the future holds for that complex.
Well, let me give you a real life story on this townhouse that I just removed conditions on, the one that we're excited for. Okay, this is interesting. When I went through the reserve fund, went through the condo documents, what I found was that they attached the reserve fund study from 2015. Okay? Now,
that's a long time ago.
I'll let you in on a little secret here. As per the Condominium Act in Alberta, it is required by law that every condominium has a reserve fund study done once every 5 years. So when I first saw the 2015 one, I'm like, why did they attach this in here? I don't understand. And I had to go through, it's a lot of documents. It takes a while to kind of go through all the documents. And then as I kept sifting through the documents, I found one from 2026. I'm like, oh, okay, perfect. This one was done in January, but it said draft on it. Okay. So they just recently done it, and it wasn't completed yet. But they handed us the draft so that we could see the reserve fund study that was just recently done. They just haven't they haven't finalized it and audited it yet. So, but I was wondering, why did they attach the 2015 one? And when I looked into it, I found out that they didn't do a reserve fund study in 2020 when they were supposed to by law. So what I did is I actually called up the management company that sent over the condo documents. And I asked him, I said, why? Can you tell me why you guys didn't do the reserve fund study in 2020 like you were supposed to? I'd already done a full analysis of everything. And based off of the reserve fund study for 2026 that I got, everything was fine. I went through all the financial statements. Everything was fine. But there was just that one thing there. It was really bugging me. I'm like, why didn't you guys do it in 2020?
Yeah, it's like, is this mismanagement? Does this show that you guys aren't doing what you're supposed to do? Right. And
what she answered was that we just took over, and she has no idea why the previous management company didn't do it. She says, to my understanding, they just decided they didn't want to. It was like, damn. Had I tried to buy this a couple years ago, I probably would have said no, because like if they're not following the law, if they're not getting the reserve, why didn't they do it? You know what I mean? There's no reason not to. It seems like all the finances were all in order. Like after going through all the evidence, I mean, everything's been fine for a very long time. But the fact that they just neglected to do that was a sign or an indication of mismanagement. And now, thankfully, the new management company came in, and then they ordered
First
it
order
immediately.
of business.
First order of business. Let's check all these boxes off that we're supposed to do.
Yeah.
So that was something interesting for me. So there you go. There's a great complex, really decent shape, lots of money, and everything else, and they weren't managing it properly. It's just one example of how not every condo corporation is managing it properly. So that was just one that we just dealt with recently.
Yeah. So the second question here was, have you ever been burned by condo fees jumping or a special assessment where you have to come out of pocket for a big expense like siding, roof, or windows?
No.
Nope.
Not me.
Yeah.
Not me.
Are you saying you know of other people who have?
I know of lots of people who have. And do you want to know why they were quote unquote burned and I wasn't? Because I know how to properly analyze condo documents. And I could see problems coming from a mile away. Now, I've bought properties where I knew that a special assessment was coming. I've bought properties where I knew that the condo fees would be going up. See, I knew, and most people that were affected that weren't me didn't know.
Right.
And if you know how to properly analyze condo documents and review reserve fund studies and financial statements and meeting minutes, it's very easy to spot what's going on. It takes a little bit of time. It definitely takes experience and guidance. But with all the experience that I have, I can see what's happening in the financials very easily because I know how to read it. And it's kind of like, each of you all have your own craft or your own trade or your own, career. And in most cases, a lot of, you deal with some form of code. You know what I mean? Some code that was created by the government, that you have to follow. Code or, bylaws or rules. But everybody has something that they have to follow. And it's kind of sort of the same with condo documents. Once you understand how to read it, once you understand how to read code, or the code, or know where to look, it's very easy. But for most people, they don't know. And this is why we hear so many bad stories about condos, is because people don't know how to properly assess it. And then they just go ahead and buy it. And then they something happens where it's like, the condo corporation says that there's going to be a $10,000 special assessment and everybody needs to pay. And they're like, how could this happen? This is a piece of shit condo. Well, no, I mean, it was always there. You just didn't know how to look for it.
Right.
Right? And had you done proper diligence, you probably could have seen it. You probably could have seen that there was going to be a shortfall in 2027 in the reserve fund. And this is why it's so incredibly important to get your condo documents reviewed by a condo doc review company. Okay, there are companies out there, you can pay them a few $100. They will review the documents for you. Some of those companies are good. Some of those companies are not so good. But at the end of the day, get someone to help you review it. Get them to go through the meeting minutes. Get them to go through the bylaws. Get them to go through the reserve fund study. Get them to go through the financial statements. And ask questions. Ask them, is there any shortfalls coming up? Is there any potential for condo fee increases? What is the projected condo fee increase every year for the next 5 years? All that stuff you can find within the documents if you know how to find it, right? Yeah. So no, we've never been burned. We've never, without knowing that it was coming. Like most
I wanted to go back to that, Wayne, because you did say that we've bought properties where we knew a special assessment was coming, or we knew that fees were going to increase. And so I just wanted to touch on that because you kind of breezed over it, because a special assessment or increase in fees doesn't automatically say mismanagement or this is a crap complex, or like, it doesn't always mean that it's like the worst case scenario and avoid.
Right.
sometimes there's just things happen that are uncontrollable, or sometimes it's, like when you look at, if you've ever dive into a reserve fund study, you'll see that things are mapped out for like, what is it, like 20 years?
25 or 30 years.
25 or 30 years in advance.
You can see every expense that's coming.
Yeah.
And they proactively plan for it.
And sometimes things are going to cost a little bit different than what was planned or whatever it may be. But my point is that like you can see it coming from a mile away in most circumstances. And so also like increases in fees isn't a bad thing either. A, it should be keeping up with inflation, and B, it should be making sure that it's looking in advance and saying, okay, we're going to need a little top up in year, whatever, 15, because we need to do a roof. So we're good for now, but on year 5, we're going to increase it by this much. It's all to manage all of the things that need to happen on a property. So it doesn't automatically mean that it's bad. It just lets you know in advance that this is what's happening or this is what we need to deal with.
Yeah.
Does the math still work?
Yeah.
Right? It's just, does the math still work?
It's really that simple. It's just a management of the funds. And like Gabby said, sometimes some things cost a little bit more, or there's some surprises.
Yeah.
That
no different than owning a home.
That rain cap on top of our unit in the townhouse that was leaking down into the bathroom that we were talking to you about. That was something that was not expected. And so that means that they had to send someone down there, order that thing, get up on the roof and put it on there. I mean, how much is that actually going to cost? Not that much, maybe $50, $100, something like that. But that's money that they weren't expecting to have to spend. So that's going to deplete the reserve. And so that's why it's important that by law that the condo corporation gets a reserve fund study done every 5 years, is because they reassess all the financials. They reassess all the components, the building components. That need to be replaced and what condition that they're in, so that they can go and reassess, okay, we originally planned this much money over this much time, over the next 30 years, to make sure that we cover the replacement of the roof in 10 years, the replacement of the siding in 5 years, the replacement of the parking lot in 12 years, the replacement of the fence in 8 years, the replacement of the front steps in 17 years, et cetera, et cetera, et cetera. And they map it all out.
Mailboxes, doors. Yeah.
But things happen, and sometimes maybe the fences got blown over by the tornado that came through, and it wasn't covered by insurance. I don't know. You know what I mean? Like there's lots of different things that can happen. So they go and they reassess, they audit what's going on, and they're like, okay, are we still on track? Well, the wood fencing is actually deteriorating significantly faster, so we're going to have to do it a little bit sooner. Or you can look at potentially painting it, which will extend the life of it. And then they make recommendations based off of that. And then they'll reassess, okay, how much do we have in the reserve fund? How much did we project that we were going to be taking from condo fees? And how much are we on track for now? And if it's not on track, and there's a potentially, they look and then they see 17 years from now in 2043, we're going to be crossing below the threshold of how much money we need in the reserve fund that year. Perhaps what we should do is we'll keep the condo fees as is, but in 2032, we're going to increase the condo fees by an additional 1% for 5 years. So the condo fees will go from $300 a month to $303, and then $306, and then $309, and then $312. And then that additional extra, they'll look and see, okay, if we do that between 2032 and 2037, whatever, wherever I'm at, how does that change how much money we have in the reserve in 2043?
Yeah.
And then it looks, and it suddenly corrected it. It's like, okay, perfect. That's all they do. They just kind of tweak things a little bit over time. But that's why you have to get it done every 5 years, so you can audit to make sure that you're still on track. Yeah. If the funds are being managed properly and they're not spending money on things that don't need to be done, and things are getting repaired and taken care of and maintained properly so that they last their full life, and if they are collecting enough condo fees and setting them into the reserve and investing those condo fees as well, and making sure that they're getting, a little bit of investment returns to keep up with inflation. And if it's all being managed properly, there should always be enough in the reserve to cover all the potential maintenance, repairs, and replacements that are coming over the next 30 years. In a perfect world. But things happen. Sometimes catastrophic things like sewer lines crack, and collapse, and then they need to replace the whole sewer line, which means they need to replace the parking lot sooner than what they were planning. And then they look at that, and now they don't have enough money in the reserve because they weren't planning on doing it for another 20 years. You know what I mean? Mm-hmm. There's a lot of things that can happen. So it's not always necessarily mismanagement. Sometimes just bad things happen, and they need to correct it. And so they might need to tweak things a little bit. They're going to ask, hey, everybody, we need you all to pitch in $5,000 right now in order to fix this sewer line and repave the parking lot. However, this means that we're doing it 20 years sooner than what we are planning. So we had already planned to do the parking lot in 20 years from now. That means that we're going to have additional money 20 years from now. That means 20 years from now, the reserve fund is actually going to be more than is what is needed because we collected $5,000 from you today. So as long as you're planning on keeping this condo for a very long time, it all kind of balances out. I'm going super, super advanced and deep on this one.
You are.
And I told Gabby before the show, we're going to keep it super simple, but I always try and overcoach and overdeliver to you guys. If you understand it, it tends to make a lot of sense. That's why it's so fucking annoying watching people on the internet in groups and being like, don't do that. It's fucking stupid. Special assessments, condo fees. It's a fucking joke. That's clearly an ignorant moron. I repeat this a lot. I say this a lot, but I don't think people really truly understand the definition of ignorant, meaning that they choose to ignore.
Right.
You know what I mean? They choose. They could go and do their research. They could go and find the answers, but they choose not to because they are ignorant. Most people on the internet are ignorant, and they just don't understand, and they choose not to understand. I'm a little bit different. I seek to understand first, then to be understood. Okay? So, if you apply yourself, if you go and do your research on this and you learn the strategies and you learn how to properly do your diligence, it'll all make sense. And that's why I'm so hot and horny for townhouses, because there is a tremendous opportunity to rent them out in Edmonton. There is a tremendous opportunity for appreciation. And because the fact that I understand how to properly analyze them and assess them, I've got the three heads. Like, I've got it all figured out. I know that they're great. I know that there's lots of great appreciation, and I know how to find the best ones. This is the best investment opportunity for me possible. And I want to teach that to you guys, right? Yeah. Again, as long as you're not ignorant, as long as you're willing to be coached and taught, there's so much opportunity for you.
Yeah.
So this person, I actually, I talked to them, and I think they're going to be booking a coaching call because they want some help running the numbers on this. And they want some help to go over the condo documents. I will just say that I don't do condo doc review. Even our students in our mentorship program, they know this. I will not do condo doc review for people. I can, but from a legal perspective, I am not technically qualified or have the certifications to do that. Yeah. And I don't like to tell someone that it's good and then something crazy happens and they're like, Wayne told me it was a good idea to buy this. I'm not going to put myself in that position. But I can teach you how to do it yourself. I can teach you how to review it. And our students in the REI Masters Mentorship Program know this. I'm not about telling you, I'm about teaching you, right? I tell people a lot of things. I leave some pretty big breadcrumbs, but ultimately, I don't want to tell you because if I have to keep telling you, then you're always going to be coming back to me. And yeah, it's a great business model. You know what I mean? Like, if I'm the only one with the answers and you have to pay me to get the answers, I mean, it's a terrific business model. I've got reoccurring clients continuously forever. But what I'd rather do is get you in a position where you can think for yourself, think like me, be curious, find the answers yourself. And most people just don't know how to find the answers. So if I could teach you how to find the answers and figure it out for yourself, then you can become independent. You're not constantly waiting. Wayne, what's the next big real estate investing opportunity? Townhouses don't work anymore. What's next? Please tell me, please. I'll pay you. Well, how about you just go figure it out for yourself? How about you pay me to teach you instead how to spot these opportunities for yourself, how to do your own proper diligence? That's what I'd rather do, right?
Yeah. In the comments here, Kyla says, such an important topic. I know to always hire a condo doc reviewer, but being a part of the REI Masters, I'm definitely more confident in what to watch for before a full review is done. Yeah. And we're so happy to know that that's what we're providing.
Yeah, and what we typically do is we tell our students to get a condo doc review done and then bring your condo doc review to our weekly coaching sessions. And so this way, once you've got it, we want our students to review the condo documents yourself, then hire a company to review it, and then bring the notes from the condo doc review company and your notes, and we can help you go through them. We'll go through your findings. We'll figure out what you found. If you have any questions about what this means or what that means, so that way you have a good full understanding of it. Again, it's going to teach you how to go through it. It's going to teach you how to, spot different things. So that way you don't need me or Gabby every single time anymore. And most of our students, they don't need us anymore. Right? Most of our students know how to look for things like that.
Yeah.
Or know how to go through their home inspection reports as well.
Yeah.
Right? A lot of it's all scary the first time, but once you know what you're looking for, it's really simple.